Hello and welcome. I'll tell you, summer is a really busy time of year, isn't it? I'm sure this is true for you as it's true for me. I just could not for the life of me find time last weekend to do any speed runs, and I barely found enough time this weekend of June 25th, 2022 to eke one out, and this is that one. So, if you are unfamiliar with what a stock speedrun is, you can check this video's description as always for an explanation. That hasn't changed, of course. And also a disclaimer as to its content, which also has not changed. So let's see what we got for this weekend. Let's hope it's something good. Whatever Sanmina is, maybe that's good. Had a good Friday, but then again, Friday was good for a lot of things. Kind of a little bit of a comeback in the market. So let me take a look at the chart here real quick. Hasn't really moved anywhere in the last year. So there's two things I can say right now. I can say one, that's disappointing because the price isn't really moving in a general upward direction. But what you can also say is that it wasn't really impacted a whole lot by recent market volatility. It seems like, just based on these highs and these lows, it has had the same general market volatility since things kind of hit the fan back in February, January-ish, than it has for the last year. Is that also true for the last 5 years? Kinda is. And actually, going back on the last 5 years, price has barely gone anywhere in the last 5 years. That is pretty crazy. What kind of business is this? Integrated manufacturing solutions, components, products, repair, logistics, aftermarket services worldwide. Integrated manufacturing solutions, components and products and services. Concept development, detailed design, prototyping, validation, pre-production, manufacturing, design, release. So a lot of fancy manufacturing kind of stuff. Let's see. Interconnect systems, I'm not sure what that is. It gives examples, such as printed circuit board fabrication, backplane cable assemblies, plastic injection moldings. These sound like, I don't claim to be an expert in this space, these sound like things that, are generally needed for, life to continue functioning, but they're also not sexy things, They're not things where somebody hears about it and they want to jump on. It's like, yeah, I want to buy that. It sounds amazing. No, it's important stuff, but it's also very run of the mill kind stuff. So even if they were doing good business, I could see why, which that's debatable, considering this chart here and the fact that there's some holds and underperforms here. And I'll get into those in a minute. But that lack of hype, that lack of this being kind of a hype type sector might have something to do with the fact that the price is somewhat stagnated. Let me take a look at the max one. What the hell is this? I wonder if this got caught up in the .com bubble of the early 2000s for some reason. Maybe it's because they provide infrastructure for stuff like that. They provide cabling. Where did I see that? Cables. Maybe they were a different company back then. I'm not too sure. But quickly came back down to earth. Had a pretty good run 2003, and it's kind of been, just. It took. This is not that great, return on investment. It took 13 years to slowly creeping crawl. You can just barely see the slow, steady incline of this stock price over the last 13 years, from like this 264 here all the way to today at 42.38. That is a painful. It's an upward crawl, sure, but it is painfully slow. Holy crap. And actually, you know what? One other thing I want to note about the chart is that COVID didn't really do anything to this, which I guess kind of makes sense, because it's probably not really on the radar for a lot of people. It is not Not really a business that I would see really getting affected by that much. So that kind of makes sense. Just an interesting thing to note. All right, I want to see these earnings because this is probably part of why it's stagnated. Not really any significant increases over time. In fact, if anything, it has started to falter somewhat since what appears to be some kind of comeback in 2019, 2018 to 2019. They had revenue increases, and they also gained profitability in 2019. I'm not too sure if they had gained profitability prior to that, but 2019 they did. And then 2020, 2021, they still have some profitability, but the revenue potential seems to have backslid a bit. I wonder if that's because of COVID. Not entirely sure. If it was, I would expect 2021 to not be worse. That's a little strange. Let me look at quarterly. Again, not terribly enthused by these numbers. It's always nice to have positive earnings. That means you're not losing money. But really, for a price to go up, what you want is future outlook. And right here, I don't see any kind of pattern of better future outlook as far as revenue or earnings are concerned, to be honest. Let's see. What are some of these articles saying? Zach's analyst blog highlights how the hell do you say this anyway? Sanmina? Sanmina. What do they have to say about Sanmina? It's like, it's a fun word to say. Sanmina! Where is it? Electronics manufacturers, service providers, Celestica. They say that right? Celestica, yeah. And Sanmina. I'm sorry, I probably should skim through this article. What is this about? List of stocks featured in the analyst blog. This is the latest news. Do I have to go look at the blog? Read this article on Zacks.com. Nah, well, actually, yeah, I probably should. You don't give me like a little summary question? A little summary, for Sanmina? As far as investors are concerned, inventory turnover ratio dropped sharply in the last quarter, including the improvement in the December quarter. Seems to indicate accumulation. Some gross margin would not normally indicate. Oh, excuse me. Tired. Indicate that volumes have weakened, but more valuable inventory builds seem like a strong possibility. Overall, this means that imbalances could be improving in the technology sector, even as the demand outlook weakens. Is that good or bad? Which is not a great incentive. Okay, I guess it's bad to invest, even if valuations are attractive. That said, some stocks are better than others because their growth outlooks are not as weak. For example, electronics manufacturer services Celestica and Sanmina are the ones that they are implying are better than others. Probably because they look at them and they say that, hey, this has pretty much done the same thing for the last. Actually, no, wait. It says down here. Estimates have increased a respective 35 cents, 8.4%, and 22 cents, 5% in the last 60 days. Okay, so that is somewhat enthusing, I think is the word I'm looking for. Force that drives this momentum in Sanmina's stock. What momentum are we talking about? Are we looking at the same company here? Simpleton Wall Street? Because I don't really see any significant momentum in any direction. So I don't know what the hell you're talking about, but then again, you're dumb and I'm going to ignore you. As E+, I don't care what I'm caring about E+, I'm looking at Sanmina, baby. Is up 1.82%, nobody cares. PE stocks that investors must not overlook. Is this low PE? I should go look at that. Let me bring up statistics. I will also read this article real quick. I'm going to look at these stocks. See where sent. There it is. Printed Circuit Board Manufacturing Co. So it's related to chips, but they don't make the chips. They make the circuit boards that the chips go on, is my understanding of how chips work. I work with computers. I feel like I should know this stuff. Trades for just 9.1 times earnings. It's a pretty good multiple, I'm going to be honest. But again, if you don't expect earnings to go up, then it honestly doesn't mean much. You can only expect the multiple to go up as opposed to the earnings to go up, and if the multiple stays the same, then the price will still go up. Right? Because let's say if you want should I demonstrate this? Yeah, sure. Because what's the price of this right now? It is 42. I want this to stay up. And that. So if I want 42, let's say I want a price target of 55, right? And it's a multiple of 9.1, so let's divide this by 9.1. That's the earnings right now, right? I am going to need, if these earnings aren't going to move, if it's going to stay 4.6 for the foreseeable future, then I'm going to need a bigger multiple to reach that 55. But if this increases to the point, so if I say a price target of 55 because I think the earnings are going to go up and the multiples are going to stay the same if I divide that by the multiple, then I now have an earnings target of this, which is up from the 4.6 you saw before. But under these circumstances, two things are going to make the price go up. Either it's going to get a higher multiple, which is literally no reason for it to do that, or it's going to get a higher earnings, which is maybe possible. I'm not entirely sure. I do kind of wonder why forward PE is this significantly lower. Yeah, I don't know why that is. What did I want to look at here? The PE? Yeah. Current PE, trailing. I don't know why the forward is 7.7. I feel like it should be the same. Although that's calculated given the current price, so either they think that earnings are going to go up, or the PE is going to go down, or I can't think. I can't talk. I can't do anything. Let's see what else is going on here. For its second quarter. And E can manage its debt. Does it have a lot of debt? To invest $220 million in Sanmina JV in electronics manufacturing push. Ooh. Reliance to invest. Yeah, I want to read about that. When is debt a problem? Only when the company can't easily pay it off. What is their debt? As you can see, they have a debt of 300. Oh, that's not that much. Down from, well, at least it's going down. It has, so that's half of their cash. Is that a bad ratio? I'm not entirely sure. I don't know what a good ratio looks like. What is a good cash to debt ratio? Usually companies aim for a cash flow to debt ratio of anywhere above 66%. So they're not doing well in that regard right now. That is not 66. Because if I take... Where were those numbers? So if I take that cash, 627.7, and I divide it by the debt, which is 338.9, I get a very unhelpful number, which I don't know what to do with now. Actually, no, I think I wanted to do debt divided by cash. That makes more sense. 0.9 divided by 627. Okay, that makes more sense. This number is more, so it's 53%. Their debt is 53% of their cash, or is 53% the free? You know what? It doesn't matter, because either way, they are not above this 66%. How to calculate cash flow from operations divided by total debt. I'm pretty sure I did this properly. So it is typically below where what is considered good. It seems like so. That is a little troubling. Let's see, what else do we got here? I can't think of anything else to look at. Let me just double check this calculation numbers because I'm interested by these. The formula for cash flow to debt ratio is cash flow from operations. Well, that's cash flow, not cash on hand. Because I was looking at cash on hand. Right? Leading to a... Do these numbers work out? Oh, actually, yeah, I guess they do. 88 plus 38 is roughly 127. Yeah, that does work out. So yeah, they have... Actually, you know what? I don't think this 53 is even right. I think it's higher than that. I think they have far more debt than they do free cash. I mean, you saw that the net cash calculation was well below that debt, which is basically just the amount of cash they have minus the debt, and that's their free cash, which is significantly below the debt, which is not good. I'm not a fan of this. Maybe it will continue its slow eking climb that it's done over the past 13, 14 years. And in that case, it's still not even good. Sure, it may go up, but there are a lot of things you can probably find that are better in the meantime. I don't think I saw that it paid a dividend, so you wouldn't even buy it for that. So honestly, I don't think I can even justify a hold, to be fair. I think I have to go with the sell, not because I feel like it's going to go... I mean, there's many reasons to hit that sell button, right? You may think it's going to go down. That's not true in this case. I don't think it's going to go down, but I think it's going to continue to... I think the term I've heard recently is crab. It's going to start to crab, which is basically just crawl sideways kind of randomly for the foreseeable future. And in that case... I think I need to hit this sell button, not because it's going to go down, but because it's going to crab, and there's better things out there that you can probably put your money in. So I feel like I got to hit sell for Sanmina. And I think that's all. And I think that is all I have to say. And I will see you in the next one, which hopefully won't be too long from this one. I'm going to try to get back on doing at least one every weekend. Maybe multiple, because I don't want to be eking out one every weekend. That's kind of lame. Alright, I'm rambling too much. Goodbye.